we do think EM should have a good year this year, and it's again probably more about the cyclicality that those markets offer. And if you think about the stimulus that's still coming in the US, probably we think about the potential for households to keep spending. It's that export exposure of emerging markets, or maybe the commodities exposure in other regions, that really gives you that. When you start looking at value versus growth, actually, emerging markets are not the value market that they used to be. They're now dominated also to a large extent by technology stocks, particularly in China. So emerging market has a much more growthy feel these days than it used to. So if you did get a value rotation, you're probably looking at a switch more into places that have not been so great, such as Europe and Japan, maybe.
Where does that leave your return expectations for 2021? Can we beat 2020 in terms of what equities did in the year gone by? Because this year is really going to be about the underlying macroeconomics catching up.
Well, 2020 is a tricky one, whether you look at the year as a whole or you then look at what happened since March. We're definitely not going to repeat those strong returns that we had in the second half of the year. I think the story for 2021 is actually really simple. We're going to have vaccinations leading to a reopening, leading to strong growth in the economy, which is going to give you a massive earnings rebound. Earnings could grow between 30 and 50% this year, depending which region you look at. But that doesn't mean markets will go up by 30 or 50%. A lot of that is priced in. But high single digits, maybe with some upside risks pushing just into the low double digits, I think is quite realistic for 2021.
Right. Being a multi-asset strategist, what's your top asset class for 2021, Patrik?
It sounds pretty plain vanilla, but we still think it is equities at this point. I mean, we like risk in general. We also like credit, but you have to be realistic here, given how tight spreads are. That lemon in credit has been squeezed pretty dry. So, as a carry asset, it has a place in portfolios. But, that the best gearing into this strength and growth environment remains equities, and cyclical equities at that.